Hey guys, Mekki from Stock Hours, and today I'll be teaching you how I chart my supply and demand zones. Demand is caused by a large move to the upside, and a supply is caused by a large move to the downside. But both of them have one thing in common. They start with a consolidation. So, consolidation followed by a large move to the upside is demand, and then a consolidation followed by a sharp move to the downside is a supply or a supply zone. Uh, Here, for example, we had this consolidation, and for an example here, pretend big money wants to fill in $100 million to the upside. Realistically, they're not gonna be able to fill all their buy orders at this consolidation. So, if they were to fill 80 million out of 100, the next time the stock comes back into that zone, we would see a large move to the upside or a short-term bounce. Now, it is our job to watch price action and volume and figure out which participant is in control and which participant is trying to make money here. So I'll begin by charting this demand zone here. And the reason why this is a demand zone is because we rallied and kept making new highs, causing basically this is an imbalance. And here's the balance period. So I start by charting them from the top of the consolidation all the way to the bottom of the consolidation. And then I extend these. If you're in Thinkorswim, you just go on here and you extend that. And as you can see, as forward slash NQ or the NASDAQ futures came back down to the zone, we got a sharp move to the upside because of the buy orders that were left there from that imbalance, or sorry, the balance period. Now, same thing for supply. I see this sharp move to the downside, and here's the consolidation. So I will chart the consolidation and change it to red. Now, this when you see Nasdaq came back, retested that supply zone, a nice rejection, and then we sold off pretty nicely from that supply the second time. So um, when we keep retesting the zones, that basically means that most of the orders have already gotten filled. And so when we start consolidating inside a zone, that's a pretty telltale sign that the orders already got filled. So there's a probability that this could break, especially because it kept holding that supply zone over here. You could see the bounce once and then a second time before the stock made a new high, or the Nasdaq made a new high. So the moment we get that consolidation and break, I would remove that supply zone because it's no longer active. Now, try to find some more here. I see one right there. There's a consolidation followed by a sharp move to the downside, and I'll chart the consolidation and change that to red again. Change the transparency so we could see, and we came back, retested that supply zone, orders got filled to the downside by big money, and another second time before we got to see some new lows or support breaks. Another one I see over here is this one. Just duplicate this. And here's a consolidation. That green candle plotting it with the resistance. That's our supply zone followed by a sharp move. And we retested this supply zone multiple times, probably about 4 times before we got to see the real um, move to the downside. Here's another one right there, consolidation followed by a sharp drop. This would be a valid one too. That's how they're charted. All right, so here's a real-time example on the Nasdaq futures from today. After a huge gap down to the downside, we open up at a demand zone. Huge volatility. This is the opening candle here. Huge volatility to the downside. I'm personally only watching here, not taking any trades, trying to see if that zone holds or not. We get a sharp move to the upside with profit taking. Nice rejection off the supply. I wouldn't take any plays here, but on this nice rejection, I would probably play puts, targeting low a day or the closest demand zone, intraday demand zone. So that would be the closest demand zone if I were to get in puts here. Now we break this demand zone, we keep rejecting it, so that devalidates the demand zone. So intraday, I would remove this, and I'm watching this consolidation nicely. See if we break the downside sharply, it's going to turn into supply. So since we the moment we start breaking with volume, I'll chart this as a supply zone. And let's change this to red real quick. So now intraday, I have this as a supply zone. We reject a couple times here, and then finally a nice rejection. That would have been a solid entry for me at the local low break with puts right there, targeting the closest demand zone. So you can see how you can catch really nice percentages with options using this strategy. Now, sorry, I didn't want to remove that supply zone, but that supply zone is still active there unless we consolidate inside or break to the top side. So then I would remove that supply zone. Here we try and bounce off that demand zone, but since we get a nice candle with volume, I want to see continuation, and we don't see that. Get the engulfment candle to the downside. Now once we get that engulfment, I want to see if we hold this demand zone or buyers step in or not. They don't, so we get a nice clean move to the downside. Now we're consolidating here, consolidating. I'm watching intraday, watching this consolidation to see if we either create a demand zone from this consolidation if we start rallying, or a supply zone if we start making sharp new lows. So we make new lows, and I start charting this supply zone right there. That's an intraday supply zone. Change the color quick. And as you can see, we try and break here. This is basically a consolidation break. We fail to break here. We exit that supply zone, so that validates it. Now we reject a couple more times before we start dropping and making new lows. So as you can see, if I extend this here, see the way it acts. Sharp move into it, nice pullback. Now this big candle with unusual volume, I would personally play it to the upside, expecting the zone to no longer hold. So this supply zone here with unusual volume to the upside, I would play calls at the exit of that zone, targeting the closest, the next supply zone, which would be right there. So remove this demand zone, and that would be my next target right there.